So I want to thank everybody for joining us today. We have a pretty exciting webinar, one that we're excited about. It is called Understanding the Capital Gains Tax in Mexico. And one of the first things that you'll understand about the capital gains tax is it actually isn't a capital gains tax. It is an income tax. It's called ISR. And so we'll talk about that a little bit more, but that's why you see that in the title. And joining us today in the webinar, we have our guest, Yvonne Castillo. He is with Secure Title, the Riviera Maya office. Mayan Riviera Properties here, we've used Secure Title for a lot of our transactions. They do offer a lot of different great closing services and notarial services in this area. If you guys ever need, he'll go through that a little bit more, but we certainly use them for a lot of our transactions. We certainly recommend their escrow accounts to our buyers. And so Yvonne is kind enough to join us actually for a couple of webinars this season. And this is our first one that we're doing about the capital gains tax. But I will let Yvonne introduce himself just a bit more in a moment. What I want to do is run through a quick introduction of myself, and then I'll turn things over to Yvonne because he's got a great presentation for us today, and he'll be able to further introduce himself and his company. So very quick, I'm from Mayan Riviera Properties. If you don't know us, I established Mayan Riviera Properties in 2006, and we work in real estate sales, vacation rentals, and property management. I am federally certified to sell real estate in Mexico as well as in Mexico's tourist zones. I'm state licensed by our state of Quintana Roo as a realtor. I'm a member of AMPI, which is the Mexican Association of Realtors, and I'm also an international member of NAR, which is the U.S. Association of Realtors. So that gives you a brief intro about our company. This is me. If you haven't joined me for a webinar before or we haven't met before, hi. I'm originally from Michigan, and I moved to Puerto Morelos full-time in 2004. I am the broker and owner of Mayan Riviera Properties, and I do this webinar series because I love doing it. This is one of the favorite parts of what I do here at the office. But I've done a lot over the years. We've bought properties and sold properties, personally built properties, remodeled properties. I've done residential and commercial. We've rented and we've managed condo associations. So I started this webinar series answering a lot of the questions and offering a lot of the information that I wish had been available when I got started in my real estate and development adventures. So that's where this webinar comes from, and certainly you're welcome to always contact me for any information. And if I don't know the answer, I'm happy to direct you in the right direction for that. Just as a way of a quick introduction, in case you ever contact our office and you can put a face with a name, this is Laura Zapata. She is our sales agent in the office. Laura and I handle all the sales, so if you contact us about anything, you'll either hear from myself or from Laura. And you can see there, Laura's been doing this for a while as well. Between the two of us, we've been selling real estate for 40 years. So we're kind of excited about that mark today. So with that, let me go ahead and Yvonne, I want to turn things over to you. Like I said, Yvonne Castillo is the general manager over at Secure Title. His office is right on the highway in Playa del Carmen, so very close to us here in Puerto Morelos. And I'm going to go ahead, Yvonne, I'm going to make you a presenter and pass that baton to you. And that way you can go ahead and get started. Let me send this to you your way. Okay.
Perfect. Can you hear me okay? Can everyone hear me okay?
Yes, we can. Yep, you are all set. Thank you.
Fantastic. Thank you so much. My name is Yvonne Castillo. I'm a real estate attorney. I've been practicing law for over 25 years. I manage Secure Title Riviera Maya, which is a title company that has been in the region since 2004. Currently, we are providing multiple services such as legal closing support, escrow, among others. So basically, on a daily basis, what we do is assist buyers and sellers close their real estate transactions. So what does this mean? That we assist buyers or sellers from beginning to end until the real estate transaction closes. So basically, we would prepare purchase and sale contracts, conduct due diligence, verify that all items or elements for closing on behalf of both buyer or the seller are in place, and basically put all the pieces together. So we coordinate with all the parties involved, which can be the notary public, the trustee bank, any real estate company, among others, no, buyer and seller and or their attorneys. So basically, as a title company, we will help you formalize all real estate transactions. Now, one thing that is very important is to anticipate. Anticipate because basically no one likes surprises, no? And more the sellers when it comes to closing the transaction. Because I find that in the past, there was a common practice where a certain amount of people liked to record the lowest value possible in the deeds, and that will allow them to pay a little bit lower closing costs. However, in some occasions, these buyers were not very familiar with what are their obligations when selling. So basically, what I will be explaining to you today is the selling process in Mexico, and basically what are your obligations, and most important, as Amber was saying, the capital gain tax, because that's one of the most important items when it comes to selling. So basically, I'm gonna try and jump in, and I hope I am clear. And if anyone has any questions at the end, or would like to go deeper into some items, we can in the future arrange a conference call, or if I can, I will answer right now. So basically, what I will do is initiate the process. And all right. Okay, perfect. So here I am now. So the closing process in Mexico. Basically, the obligations as a seller is that basically any buyer will like to verify that the property that they're purchasing is free and clear from any liens, encumbrances, up to date with property taxes, among others. So basically, the seller has to be current with all payments. The property needs to be free and clear, all right? So in this sense, one of the obligations of the seller is to obtain some documents from the municipal government, no? Some of those documents are very important because through those documents or certifications, the municipality will let you know that the property is current with water and sewage, with property taxes. And one very important document that the sellers need to obtain as well is called a cadastral certificate. And that cadastral certificate is very important because it actually is a blueprint of the property itself. For example, it will contain what is the assessed value of the property, the square meters, what is the use. The use can be for residential or for commercial purposes or mixed use. In fact, there are many items within that document that are very valuable to calculate any taxes and so on, all right? So remember that as a seller, you must obtain those municipal documents prior to closing. Usually the title company or the notary that is acquiring, that is obtaining those or closing the transaction can obtain those documents on your behalf. And usually it takes around 1 week, all right? Other payment obligations are late fees. For example, when you are about to transfer title, if you're not current with any late fees, you must be up to date. Some of those late fees can be, for example, trustee bank fees in the event that you haven't paid on a timely fashion. Usually the trustee banks are a little bureaucratic to giving receipts or invoices. So our advice is to keep close contact with the trustee bank. Every time that you conduct a payment, that you receive an invoice or a receipt from them that discloses exactly what are the dates that you have paid, because prior to the transfer of title, all those fees need to be current. And then other payment obligations, when you're going to be using Amber to close your real estate transaction, well, your obligation as well is to pay that broker's commission. In some occasions, that broker's commission can be deducted from any income tax or capital gain tax or ISR. All right. So for those purposes, you need to obtain an invoice from the realtor. All right. And then last is the capital gain tax. The capital gain tax that we're going to go a little bit deeper in this session, so that you're fully aware what to look out. Remember, the most important thing is to anticipate. That is key, because at the end of the day, even if you haven't decided whether you're selling or not, you can anticipate and start obtaining or collecting documentation and information that will be useful for you in the future to deduct any taxes, or try to reduce those taxes as low as possible. Okay, so the key thing is to anticipate as much as possible. So basically, I'm going to go back a little bit. Those municipal documents, I'm outlining everything that you need. The certificates of no debt, as I was saying, a certificate of no debt of property taxes, water and sewage, among others. If you live in a condominium, then you have to be current as well with the homeowners association fees, because at the end of the day, the public registry will not formalize the recording of the title through which you transfer title if they don't have a letter from the administrator stating that you are current with homeowners association fees. So that is a very important thing. So cadastral certificate, as I was saying in the past, that contains all the basic valuable information of the property, and as well the latest property taxes. All right, what payment, the late fees, the trustee bank fees, property taxes, and any other items prior to closing, which can be any other that are accessory to the property, which can be electricity, phone, cable, any utility bill. Because remember, the key thing is that the buyer receives the property with absolutely zero debt. The broker's commission, as I was saying, the realtor or the realty company should be giving you an invoice, so that invoice is deductible as well. The seller's capital gain tax or income tax, okay? Basically, the capital gain tax is up to 35% of the profit that you have, all right? However, it is very important to take into consideration multiple factors, all right? Because it's up to 35% of the profits, all right? There are many things that you can use in order to deduct taxes. And how do you calculate the 35% profit? Well, basically, you need to take into consideration many things. For example, the date and purchase price when you purchased. And this is a key factor, okay? Because number one, let's say that you bought 10 years ago and you paid $100,000. Probably the exchange rate 10 years ago was completely different from what it is right now. So therefore, the capital gain tax might change dramatically. So let's say that the purchase price on the day that you purchased was 1 million pesos, all right? Because remember, in the deed through which you acquire, it must mention pesos, because that is the legal currency in Mexico. So my suggestion is that you go back to your documents, and verify the title or the deed through which you acquired, so that you verify exactly what is the purchase price and the certain date. All right. Why am I saying this? Because we need to take into consideration the date and the purchase price on the date that you sell. For example, let's say that you are selling again at $100,000. All right. Well, today the exchange rate is 21.17 pesos per dollar. So that means that the purchase price that would be recorded today would be around 2,170,000 pesos. So that means that you would have a profit of 1,170,000 pesos. Okay. Now, there are other factors to take into consideration, because from the date that you purchased and the date when you're selling, there are inflation and depreciation factors. So that is the reason why I was telling you in the previous slide that the capital gain tax is up to 35%. Let's say that you buy today and you sell tomorrow. Well, there isn't any depreciation or inflation factors. Basically, you're receiving and then you're transferring. So in that scenario, you're probably looking at paying that 35% directly. All right. So that is why it's very important to take into consideration all factors. Now, there are ways to reduce the capital gain tax on a very important way. For example, let's say that you originally bought a raw land, a lot, and over that lot you build a house where you live in. So from a legal and tax perspective, the original lot that you bought, well, that property suffered improvements, and you can use the documents that prove those improvements to reduce the capital gain tax. All right. So every time that you conduct improvements over the property, they need to be tangible improvements. Tangible that is not, for example, furniture. So what are tangible improvements? They're constructions, or let's say that you're going to remodel. You're going to add another room. You're going to change the floors and so on. So usually, in order to prove those improvements, you must obtain from the construction company or whoever provided the materials to build proper invoicing. All right, because only the invoices can be used to reduce taxes. All right, and this is very important because it is very common that when you decide to build a home or to remodel, that you hire an architect, and that architect usually receives the money, and in some occasions the invoices that are provided by the construction company or others are made out to the architect and not to the homeowners. All right, so make sure that the invoices that you have in hand contain valuable information, such as the name of the owner of the property, the address of the property itself, and the concept is very important, that which can be for materials or labor or whatever is considered. Because why is the invoice very important? Because the invoice breaks down the taxes that you paid when you started to build. All right, so that is why it is very important that every time that you conduct improvements over the property, that you receive invoices. All right, and you gather them, and we will review them with you and verify which ones can be used or not. All right, now regarding invoices, the broker's commission as well can be used to deduct taxes. So that is why it is very important that if you're paying a commission, that the realtor gives you an invoice that as well will break down the tax and that will be useful to reduce or deduct the taxes. All right. There is another way to reduce the taxes, which is to obtain a permanent resident visa. Because when you obtain a permanent resident visa, you immediately obtain a document, which is a number, which is called a CURP and RFC, which is kind of a tax ID number in Mexico. And that means that you are a person that pays taxes in Mexico and lives here and so on. So immediately when you obtain a permanent resident visa, you immediately get a tax break. And that tax break is around 4 million pesos, okay? So this is very important because if you do not have a permanent visa today and you are considering on selling, it might be a good idea to initiate the process with the Mexican consulate in your hometown so that you can obtain that document as soon as possible, so that when you decide to sell, you immediately have a tax break. I've seen that with the tax break using a permanent resident visa, you can pull off reducing 50% or 75% or even not pay anything. Obviously, everything depends on what the purchase price of the property is, no? Because everything is proportional. So if you're going to be obtaining a permanent resident visa, you can use a combination of everything that I explained before, such as the improvements on the property, the invoice of the broker's commission, the permanent resident visa, and everything can be used to reduce as much as possible. In some occasions, in the event that you don't have anything, for example, there are usually ways to reduce taxes as well, because let's say that you did conduct improvements and basically we can review the title through which you acquired, and that usually that title contains valuable information, such as the legal description of the property that you acquired. So usually we can obtain a commercial appraisal to determine what are the improvements conducted on the property and probably use that commercial appraisal to reduce taxes. So everything can be done, and but the most important thing is that you anticipate, as I was saying when we initiated this conversation, so that you right now know exactly what to look out for and what to use in the event that you decide to sell. In occasion, what we do is, in the event that you decide to sell, we would request from you that you send us your current title, the latest property taxes, and if you can, or if you have, your permanent resident visa. And let me know more or less what the purchase price or what you're selling for will be, so that we can calculate your taxes and give you a rough idea of what to do, because in some occasions it's very uncomfortable that the sellers were not informed of this capital gain tax when it's very close to the closing date, and obviously no one likes surprises. So as much as you can anticipate, the better. So as I was saying, you can use your permanent resident visa, and with that you can deduct around $700,000 pesos. I'm sorry, which represents the 4 million pesos that I was talking about previously. So having said that, as I was saying, you can anticipate as much as possible. There is one misconception, because in the past, if you proved that you lived in the property for a certain period of time, you were automatically freed of the capital gain tax. However, that has been changed by the Mexican IRS, and that does not apply anymore. So it is very important that you're aware of that, and there are no complete exemptions. There are no exceptions. What you can do is deduct. And what you can use to deduct are the items that I mentioned in the past. And obviously, as well, one very important thing is that you need to own the property for 3 years. So if you do not own for example, let's say that you own multiple properties, and you're gonna be using your permanent resident visa to deduct taxes on your permanent residence, which is one of those properties. So once that you use the direct exemptions, as I was saying, the 4 million pesos, you would need to wait for another 3 years to live in the property and declare it as your primary residence, and then reapply for another exemption deduction. I'm sorry. So that is one very important thing. So that's it regarding the presentation, and I would be very happy to receive any questions or any comments or clarifications. I would be happy to send this presentation to anyone that requires it, or as I said, I would be happy to have a conference call one-on-one or whatever you need in order to be clear on what to look out when you're looking at selling property. And thank you so much for the invitation.
Thank you, Yvonne. I appreciate it. I have actually a couple of things that I wanted to go over with you, and this may answer some questions that people have. Could we jump back into your presentation? I'm still sharing your screen. Do you mind if we jump back into your presentation? And
Perfect.
I just want to make a couple of clarifications. And I think it probably sets it up because I'm hoping, could we go through an example to kind of give people a little bit better understanding of how the tax works? You were mentioning inflation and depreciation factors. I think that was in one of your first slides.
Yes.
Can you talk to us a little bit more about what that appreciation and depreciation is? Because I think that's helpful to talk about, because a lot of people are Americans and Canadians, and we don't get appreciation and depreciation factors in our
yes, it's a very
capital gain tax.
Yes, it's a very simple item. Let's say that from the day that you bought, let's say the 1st of January 2000, and you're selling on the 1st of January 2020. Between those dates, the government has some indexes related to depreciation, all right? So basically the constructions that you originally built would be diminished, or how can I explain? They would be
depreciated. That's correct. Yeah,
exactly. So and that depreciation is taken into consideration based on the tables that, or indexes that the government provides on a yearly basis. All right. So that is exactly.
Thank you. How about the inflation? How is inflation calculated?
Well, it's just that there's an inflation period that is mentioned by the government, and usually that inflation is between 3 and 4% increase on a yearly basis.
Right.
So exactly. So basically, you would have a certain amount of depreciation, but again, you have inflation factors that you need to match.
Exactly. I think this is a great point, because a lot of people, that when I start explaining how this tax is calculated, it's a very foreign concept to many Americans and Canadians, because we don't have these type of factors when we're calculating capital gains. And so I like to tell my clients that, it's actually a much fairer way to evaluate gain. I'm from the US, right? And if I buy a property for $100,000 in 1980, and I sell it in 2020, 20 years later, for $150,000, technically my gain is $50,000, and I would be taxed on that in the US. But Mexico doesn't do that. Mexico says, hey, $100,000 in 1980 was worth a lot more due to inflation. It's changed. And so they'll let me bring that rate up so that we're actually subtracting what's the equivalent of $2020 from
Exactly. And
from
you need to take
$1980 regarding the value of the land anyway.
exactly. And the third variation would be the exchange rate, because at the end of the day, everything here is labeled in US dollars. And
Exactly.
and basically we have to play around with that, and that is why it is very important that all the sellers review the deeds through which they acquire, so that they don't have the idea that they bought for $100,000 and they're selling for $100,000. It's completely different, because at the time that they bought, the exchange rate was probably very, very low.
There might be some gain just based on the exchange rate.
Exactly. Because everything, the deed always needs to mention pesos, because that is the legal currency in Mexico.
Exactly. So there may be some.
Even though that the deed can mention US dollars, for example, it would say the purchase price is $100,000, which based on the current exchange rate of this date is equivalent to 1 million pesos.
Yeah.
And so on.
Yeah, it's really important to know you're not comparing US dollar of purchase price to US dollar of sale price. You're comparing the equivalents of in pesos at the time that it was purchased, which is reflected in the deed, and then the time at sale. And there may be some gain there just based on the fluctuation in the exchange rate.
That is correct.
Yeah.
The gain will be based on the pesos, not on the US dollar.
Exactly. And with the depreciation that you were talking about, that's something, again, that we don't necessarily have in our calculations. And so basically the government, if you've bought a house, says, your land appreciates, but the construction can depreciate over time. We do that in our taxes, but we actually do it in a separate area. And so it doesn't actually affect the gain necessarily directly. That gets a little bit complicated, but it
will be deducted.
But basically, the older the house is, the less value it has, right? Because a house has a certain lifespan of construction, right? So a house that's brand new has more value per square foot than a house that has 50 years old per square foot for that construction. And so I always like to highlight that, because that's not a part of what we're customary to seeing in our capital gains tax. We're not accustomed to seeing inflation or deflation, and we're not or depreciation, and we're also not, to your point, used to having to work with the differences in exchange rates. I want to just clarify you mentioned all the different deductions, right? I can deduct my real estate commissions, and as a realtor, obviously our company emits those invoices for real estate commissions. There's the capital improvements that you make into the property, as you mentioned, remodeling and construction, things like that, new construction.
Tangible improvements.
Tangible improvements. I want to ask you a couple things about these and just clarify for everyone, because again, these are some important differences that when you come from other countries, you're not accustomed to.
Yes.
You use the word invoice. If I got a little note receipt scribbled from my builder, is that an invoice? Can you walk us through just a little bit more about what in Spanish is called a factura, so that we're really clear that these are not just simple receipts, these are facturas, because in our home countries, we don't use facturas. And so a lot of people think, they come to my office and say, I have all my receipts, and they pull out all of these store receipts for things that they've bought, and that's not going to cut it.
So basically an invoice, and the translation is factura. The factura or invoice is a document that is authorized by the Mexican IRS. Okay, it's a document that has certain characteristics, such as it will say the tax ID number of the individual or the corporation that is issuing that document. It will contain certain electronic file information, so that the Mexican IRS can verify that that is a real invoice. And basically, the invoice will break down the tax. the tax that the person that is paying is accepting, because when they pay the tax, the individual that is receiving will again at the same time be paying it to the Mexican IRS. All right, so the invoice has certain amount of technical information which the regular receipt doesn't have. And what I mean is a receipt is a simple piece of paper that will say, technically, I received 50,000 pesos from this individual for this concept, and that's it. But it does not break down the tax. It doesn't have the characteristics that an invoice has. It is not a document that is authorized by the Mexican IRS, among others. So that is why it is very important that the homeowners go back to their files and verify that they have true invoices, so that they are not misled or don't think that they have all the items to attack that.
Yes, thank you. I'm sitting here, I happen to have one on my desk. Now, they changed facturas from a manual system to an electronic system. And so here's
Correct.
a factura that I just happen to have. This is actually one of mine, and it has my name. I'm going to be pointing weird, oddly in this camera. My name, my RFC, all the legal documents. This happens to be a factura from the government, but at the bottom it has this QR code and all of the codes there at the bottom and talks about it. If it's in today, if you receive a factura, that's what it's going to look like. If you built a house before those electronic facturas, a lot of times they were handwritten, but they have a very, very specific format. Yvonne, what happens if I want to just highlight a couple of things that you said, because I think it's really important. If
Yes.
you build, right, if you build new construction or remodel or whatever, you want to get a factura. That factura
Correct.
needs to be in your name, you know,
Correct.
your tax ID number, and the description needs to include the address of the property. This is so important because I get people that have gotten facturas for their things, but in the description, the builder hasn't put the address for the property. And this could be an improvement for a house down the street at another, city. Nobody knows, so that's important.
One very important thing. Probably the individual that is paying the construction company doesn't have a tax ID number right now.
Sure.
However, that does not mean that the invoice can be used, because you can insert, or the individual that is issuing the invoice can tax ID number on behalf of the person that is paying. So you don't need that immediately.
I'm so glad you said that, because that was my next clarification point. If you don't happen to have, you have to have your either temporary or permanent resident visa to get your tax ID number, which you may be getting in the future. But please get your facturas. You can still do that. There's a general tax ID number that's used for foreigners that don't yet have their actual ID number. They can still give you a factura. And then at the end of the day, when you go to make your deductions and at that point have received your visas and have your tax ID number, you'll still be able to use those as valid deductions because you were still paying the tax then. You just didn't happen to have a tax ID number, but they will be valid down the road, providing you've went ahead and gotten that before closing, correct? Sure. So when you get these facturas, make sure that even if you don't have your tax ID number yet, you are still getting your facturas. You're getting them in your name. You're getting them with the general tax ID number, the template one. And then, and I see Yvonne, he's jumping back in, so we're good.
What happened with my computer?
I don't know, no worries. And so what I'm going to do, Yvonne, is I'm going to jump over. Let me, we're going to share a different screen here.
Are you still sharing my screen?
Yep, but that's okay. Let's see.
Perfect.
I don't see your PowerPoint presentation anymore. I'm just seeing your desktop. So, another thing I wanted to just say quickly about if you have a question about how you get these visas, Yvonne, you may not know this, but about a month ago, we did a webinar with Millie Arceo, and we went through all the requirements of temporary and permanent residency and how you qualify for that. Everyone can eventually apply for or qualify for permanent residency, whether you qualify immediately or whether it takes 4 years. So one really important thing I want to say about getting permanent residency, this isn't something you want to wait on until the last minute when you decide to sell. You want to be planning this because it can take up to 4 years to qualify for that status.
And as I was saying at the beginning of the presentation, it's very important to anticipate as much as possible. Anticipate. Even when you originally buy the property, it's very important that you are aware of what you're going to be needing when you sell. So exactly.
Yeah. Okay. I have a few more questions and clarifications, and then I think we'll be able to get to some other questions. Can you talk about, I want to make sure that I understand as well, and I think for to set this up to talk about an example. So if basically what they did was they changed the capital gains tax law and put this cap on gains, right? So you can have income up to, like you said, approximately 4 million pesos. And after that threshold, you're going to pay the capital gains on what you receive over that, correct?
Yes, that is correct.
Okay.
Exactly.
And I understand that me as a taxpayer, I can exempt, as you mentioned, one property every 3 calendar years.
Yes.
One thing I want to clarify with you, as far as the actual property,
you can use the deduction, the 4 million peso deduction every 3 years.
Right. So I think that answers my question. So I don't necessarily have had to own the property that I'm exempting 3 years. I just have to make sure that I haven't made another exemption within those 3 calendar years, correct?
Correct.
Okay.
Correct.
Okay. So I don't necessarily, if I only bought this house a year ago, I can still use it as my exemption. I just can't have had another exemption within the last 3 years.
Prior.
Perfect.
Exactly.
It doesn't really have to do with how long I've owned that particular property. It has to do with how long it's been since I've actually made the exemption on my personal residence, wherever it was. Okay.
Correct.
Perfect. That makes perfect sense. Last thing I want to talk about, Yvonne, and this doesn't directly have to do with the capital gains tax in Mexico, but I noticed that everybody checked in from mostly the United States and Canada. The United States and Canada have a tax treaty between these two countries. So basically what happens is if you are in, let's say, again, let me take myself as an example. I'm a US citizen and I sell my house down here. The United States is going to charge me a capital gain tax using their formula, how they calculate it back in the US, and Mexico is going to charge me here. I think it's important for people to understand that you don't end up being double taxed because there are tax treaties between these countries. So let's say Mexico says, in this transaction, you owe $3. And the United States government comes and tells me, well, here in the United States, you're going to owe $5. So I pay my $3 in Mexico, and then I go back to the US and say, I know I owe $5, but I've already paid $3.
Exactly.
So the US tells me I only owe $2, right? So I only pay the difference. And like you said, if it's turned around and the US says you owe $3 and Mexico says you owe $5, then I pay my $5, I go back to the US and I get $2 of foreign earned tax credit. And you have to ask your accountants back in your home countries what you can do with foreign earned tax credit. But you get full credit for the tax that you pay in Mexico against the taxes
that is correct.
You owe
that is
in
what
those home countries.
I'm aware. That is correct.
Yeah. I know sometimes as a realtor, what we end up doing is we end up very early. Like Yvonne said, it's really important when we list a new property, I call Yvonne and he helps me out by giving me a provisional tax quote. And that, like he said, it keeps those surprises from happening. And so what happens is, we have those conversations and I say, do you know what you owe in Canada or do you know what you owe in the US? Because that's an important part of, talking about no surprises. We can get through the transaction in Mexico. If you're surprised by what you owe back in your home country, you want to make sure you understand that and you want to make sure you get the documents back from your realtor or from your closing service that you can use toward those home country taxes as well. So we often kind of go over not only the Mexico picture, but the home country picture as well, so that they understand when everything is said and done what they're looking at. I think
that is part of the anticipation that everyone needs.
Yeah, absolutely. Let me see. So I'm going to jump to, thank you so much for going through those with us. I'm going to jump into questions. So
Yes.
let me take a look. Tory had written in a question, and I'm going to see here. Tory says to deduct the tangible property improvement. So this is, again, these are things like construction and remodel, things
Correct.
that add value to your property, okay?
Yes.
If you're buying something that's, like he said, furniture or replacing something as a maintenance item, that's not really adding value to your property.
No.
Okay. Would you give your notary the facturas?
Yes,
Yeah.
because at the end of the day, the notary public is a government appointed official, and part of their obligation is to calculate, retain, and pay taxes on behalf of both buyer and seller. So technically, the notary needs to, prior to closing, calculate everything.
Yes. And so, Tory, to answer your question, you would provide those facturas to the notary at the time of closing. You don't need to be providing them, obviously, as they're obtained, but you need to be saving those in a safe place. I always recommend people scan them and put them online somewhere, just in case, papers are things that can be lost or destroyed. So scan those in and get them in an online cloud document somewhere so that you have them come closing. And then he also asked, do I need to go to the city to update the value of the property with the facturas? So no.
When I started the conversation, I mentioned the cadastral certificate.
Mm-hmm.
And the cadastral certificate is actually the document that is used to determine what is the assessed value of the property. Based on the assessed value of the property, you pay property taxes on a yearly basis. So the government, the municipality, will automatically calculate what are the improvements or the current value of the property prior to selling. So you don't need to update anything.
That's correct. Now he would need to, if you'd built a house, Tory, not from a capital gain perspective, but if you've built a house, you do have to go to Catastro. In Puerto Morelos, it's actually a separate transaction. In where Yvonne is at in Solidaridad, it's not, but where we are, it is. When you get your terminación de obra, which is your final occupancy permit, you have to take that occupancy permit over to Catastro and have them add the new square meters that you've built to your tax certificate that he's talking about. So there is something you need to do there. Excuse me, but you don't have to present the facturas to do it. It's really just based on the amount of square meters that you've added to the house. One other thing I want to ask you about, Yvonne, and that is, again, it's something that we answer a lot of questions about. You mentioned, some people say, oh my gosh, I built my house and I don't have a single factura, right? I didn't get any facturas. And we always try to get people to do this up front, right? But some people have owned for a really long time. Some people didn't check into the webinars soon enough. And they don't have any facturas for the house. You mentioned that you can get an appraisal to stand in lieu of the facturas that you have.
It would be an appraisal for tax purposes. And
Correct.
We would need to conduct an inspection, bring individuals that are authorized by the Mexican IRS in order to inspect the property, take pictures, and determine what are the improvements created over the property through time.
Correct.
So let's say that you don't have invoices and you bought a lot and you did build a home.
Oops.
So in that scenario, that commercial appraisal will be much valuable.
And I think it's important to note that because one, I don't want people to freak out, but and worry that they don't have their facturas. But I think it is really important to note that doesn't mean you shouldn't get your facturas. Back in the US and Canada, again, we come with these preconceived notions. Our appraisals cost about $250 to $450. They don't cost that in Mexico. They're much more expensive. And more
when it comes to appraisals that are being used to reduce taxes.
Reduce taxes. I mean, basically the Mexican government says, hey, if you built your property under the table and you didn't pay the 16% goods and services tax, they're not going to make it. They're not going to incentivize you not paying tax and paying it under the table. So that that appraisal can be more than even 16% of the value of the house. So we're talking about expensive appraisals. Oftentimes it's still well worth doing, but this is not a
Exactly.
$300 or $400 appraisal like we're used to at home that I want to be sure people understand.
Correct. That is correct.
So it's very, very important. If you own a home and you're doing any type of improvements, get your facturas. Like Yvonne said, even if you don't have a tax ID number, make them give you one. Put the general tax ID number in. Get the description that includes what kind of improvement it was and the property's address in the description. Get that, because it is way better to be prepared and come with those facturas, which you've already paid for the work, and so it doesn't cost you anything more at that point than being behind the 8 ball and having to get some really expensive appraisal done.
Correct. And you reduce the capital gain tax in a very important way.
Any other questions from anyone else? Tory, I hope that answered your question that you had chimed in with. Does anybody else have any other questions? Again, you're welcome to use your mic or type them in the chat box. So there's Yvonne's contact information. If you have any questions, you're welcome to reach out to him. And with that, thank you so much for joining us. So after our webinar finished this week, Yvonne and I were chatting. And if you were on the webinar, you know this. I sort of sprung a question on him in the question and answer period and asked him to go through an example. And we did that, but we did it orally, and we both thought we did it kind of fast, and it wasn't as much of a help as it could have been. And we both thought that it was important to go through an example. So I'm adding this section of the video recording to our webinar video so that everybody has a good example to go through. So I hope that you find this helpful. Here's what we're looking at. To do this, we need to pretend that we're a seller, okay? And that we are selling our property, and that then, our property is being sold for 5,958,663 pesos. Okay, obviously all of these amounts are in Mexican pesos because as Yvonne talked about, legally all the transactions in Mexico are registered in pesos. Now, you might be wondering, how in the world did two parties come up with a strange amount like that for the purchase of a house? Well, we actually took a real example to do this. It was a recent example. And I think Yvonne talked about this in the webinar. Remember that a lot of times in our area, houses are sold in US dollars and the actual money is escrowed in US dollars while the actual transaction is being recorded in pesos. And this example is no different. So this house was sold in a little more regular dollar amount. But when you applied the exchange rate to the transaction, it came out to this uneven amount. So neither here nor there, just understand that this is in Mexican pesos and that this is the amount of what you're now selling your house to your new buyer for, okay? All right, this house we originally bought. And when we bought, we have a value registered in the deed of 1,800,000 pesos. Now, if you've taken webinars with me, you know, the Buying in Mexico webinar, you do not register for a lower value than what you pay for your property, okay? And hopefully, because it comes back to bite you when you do this calculation, right? You have a false gain. So hopefully these folks paid 1,800,000 for this property. And if they did, they're making a sizable gain. Okay, good on them. If they didn't pay 1,800,000 pesos and they paid more, they're going to be taxed on the difference between these two numbers. And so this is why it's really important to register the real value of your property in your deed. If you have any questions about that, go back to our Buying in Mexico webinar. We talk about it in depth there. But for these purposes, know that the house is being sold for this, and it was originally purchased for this. Now, in the webinar, Yvonne talked about how inflation is applied and depreciation is applied, okay? And this ends up adjusting this original purchase price, adjusting up for the inflation that's occurred over time, and adjusting down for the depreciation on the construction that's occurred over time. All right. So in our example, after you make those adjustments, and again, these are scheduled rates of inflation and deflation, inflation and depreciation that notaries use, okay? This is a standard table that's applied. Our adjusted purchase value comes out to $2,008,280. So for purposes of calculating the gain, you are going to be using this number, okay? It's basically been adjusted. It's taken this $1,800,000 purchased whenever it was purchased, and it brings that value up to, today is 2020, so 2020 peso value. So that way you were able to take the 2020 peso value and subtract it from the 2020 peso value. It's a fair way to calculate gain, and it's interesting because we don't do that in either the US or Canada. They don't take into account these factors, and it does help. Anyway, moving on, deductions. We talked about what kind of deductions you'll have. You can deduct your acquisition tax that you pay. You can deduct your notary honorarios that you pay when you buy. You can deduct capital improvements that you make in the property. We learned that in the webinar, remember that capital improvements, ideally you have your facturas, and if you don't, you can use an appraisal to stand in place of those facturas, okay? And your real estate commissions. Those are also deductible, ones that you pay as a seller to your agent for selling on your behalf. If you have any gain, obviously hiring a realtor can potentially not cost you a dime, right? Because 100% of their commissions get added into the deductions, all right? So in this case, they haven't done much remodel. They have a pretty modest gain. They have a pretty modest deduction amount of 349,074 pesos. Okay? So what does that mean? Well, now it's time to actually calculate the gain. The gain ends up being this number. How did we get there? We take the adjusted value of the original purchase price, and we add the amount of deductions that we have. Okay, that's what we've done on this line here. And then we take that amount, this plus this, and we subtract it from the new amount that's being paid, the new amount the house is being sold for. When we do that, we realize that the owner is receiving a gain of 3,601,309 pesos. All right? So that is the gain. That is the gain that's treated as your income. Remember, the ISR is an income tax. And there's a sliding scale. It goes from basically 0 up to 35%. It climbs pretty quickly. So most transactions are going to pay somewhere in the neighborhood, depending on how much this gain is. They're going to be paying somewhere in the neighborhood of 20 to 35% on the amount of their gain. It's that way because people that make very, very little in Mexico pay very, very little in taxes, and pretty quickly it slides up to in the 20s and 30s, okay? Once you're at over about 3 million pesos in gain, you're looking at the full tax of 35%, okay? And so this gain is taxed, and again, I have 35% in brackets because maybe in your transaction, you only have 500,000 pesos in gain. And if you only have 500,000 pesos in gain, you're going to be paying less than 35%. You're just going to have to apply whatever tax rate. The notary actually is going to apply whatever tax rate you fall into. And so if you take 35% of this number, this is what you're going to pay in your ISR. This seller at closing will pay 1,260,458 pesos in capital gain, okay, which is known as ISR. All right. Now, some of you have the question, hey, what if we are permanent residents or Mexican citizens and we have this partial exemption, right? If I can get this to advance. Here we go. So here we go. What if what if I'm eligible for that partial exemption? As we learned in the webinar, If you are either a Mexican citizen or you're a foreigner that has permanent residency, you qualify for this partial exemption on your ISR tax. If, and only if, you have not used your exemption in the last 3 calendar years. Okay? So you have to be a Mexican citizen, you have to be, or a permanent resident, and you cannot have used this exemption in the last 3 calendar years. If that is you, then you are exempt from taxes on the proceeds of up to 700,000 UDIs. Okay? And you think, what is a UDI? That's a really good question. UDI is a index that Mexico uses in their stock market and financial market. So the UDI rate is going to flux a bit with the exchange rate. It usually falls somewhere in the range of about $240,000, $220,000 to $240,000, the equivalent of that. You'll see in a minute, a 2020 version, but the long story short is you're going to pay ISR tax. The first amount of proceeds, sale proceeds you receive, we're not talking about the gain, we're talking about the proceeds. The first 700,000 UDIs worth of proceeds that you receive are not taxed. The amount of proceeds that you receive over that threshold are taxed. Okay? That probably makes absolutely no sense until we go back to our example. So let's do that. Remember in our example that the house is being sold for 5,958,663 pesos. All right. In 2020, March 2020, 700,000 UDIs was the equivalent of 4,527,600 pesos. So if my sale price had been this amount or less, I would owe nothing in capital gain. Okay. But if I exceed that threshold, Mexico essentially considers that a luxury home, and they have a luxury cap on this. So luxury homes are eligible for the same exemption as everybody else, but when you surpass that threshold in house value, you then do pay the tax on the portion that exceeds that value amount. All right? So again, this number exceeds this number. It actually exceeds it by 24%. Our new sale price is 24% higher than the threshold, which means you're going to pay 24% of the taxes you would have owed. So my original tax would have been this if I didn't have that partial exemption. And if I take 24% of that, that's the amount that I owe, which is the margin over that threshold. So I end up owing 302,509 pesos in ISR tax. I would have paid this, but I own a luxury home, and my luxury home, as Mexico defines it, exceeds the threshold. Therefore, I'm going to pay the percent that exceeds it. In this case, it's 24%. 24% of this number equals the amount that I pay. Okay? That's how capital gain works. And that's how your partial exemption as a permanent resident, or obviously if you're a Mexican citizen, can benefit you. It can benefit you greatly. You could potentially pay nothing if you own a home with a value that is less than what Mexico considers a luxury home. They can completely exempt you. Or if your home's value is slightly over that, it can also benefit you greatly. Obviously, my taxes are far less than what I would have paid. If you own a home that is worth millions and millions of pesos, okay, 10s and 20s or 30s or 40s or more million pesos, that exemption gets to be less and less advantageous, right? Because your home is so far past the threshold that the value of what you're saving becomes diminished. All right? So, a couple of things to note.
just as review, when we're talking about this permanent residency and Mexican citizens and how you get this partial exemption, remember that all individuals listed on the title need to be permanent residents or Mexican citizens. And they all need to have their RFC tax ID numbers. Okay, we talked about that in the webinar. So if you are on your deed alone, you're the only, and you're a foreigner, you're going to actually be the primary beneficiary of your trust in your deed. You need to be a permanent resident. If it's myself and my husband, both of us need to be permanent residents. If not, we're each treated as individuals, and I only get to exempt my half, say, if I'm a permanent resident. If he's a tourist, he doesn't, right? So make it a goal to make sure that all of your title holders are permanent residents. Another thing to note, if you're a foreigner and you have a trust, and your trust, the primary beneficiary is an LLC or some sort of corporate entity, you are not people, you are not individuals, and you don't get this tax exemption. Okay, so this is important to think about when you are setting up your trust. Okay, note that if you're putting it into an LLC or some sort of other corporate entity, then you don't get treated as an individual, this tax exemption on a primary resident. If you own your property inside a Mexican corporation, you are also not a private person, right? So you don't get a primary residence exemption. If you own a Mexican corporation, you are going to pay the full ISR as well. However, Mexican corporations pay it a little differently. When you are selling and you own the property in trust, or you're selling as a private citizen, your taxes are due at the time of the sale. And when you have a Mexican corporation, it's just considered an asset of that entity. And so at closing, the notary does not collect the tax. The Mexican government does. It's considered just another income line item on your month of transactions. So you'll be able to deduct all the expenses that you have, and it's just treated as income into your company. And Mexico pays their taxes monthly. So that month you will owe the income tax that you have. However, that's calculated based on your Mexican corporation's activity. Also, just keep in mind, Yvonne mentioned this in the webinar as well, that exchange rates can affect those registered sale values. So remember that if you're buying a property that's in US dollars, that is recorded at the current exchange rate at the time of the sale. And if that exchange rate changes, it can affect the gain that's realized. So that's something to keep in mind. One last thing we thought would be worth going over to make sure, now nobody's expecting that you can calculate this gain. Frankly, when people come to me, this is a very long and complicated equation. Notaries use, as we talked about, notaries use a computer program to calculate it, okay? But understanding how it works gives you an understanding of what you need to be doing to get yourself in the right position. Things that you need to be doing to get yourself in the right position are obviously optimizing your deductions. How do you do that? We talked about it. Get facturas for all the capital improvements that you put in the property. Remember that the capital improvement is something that adds value. Maybe you put in a granite countertop, or maybe you do a remodel or an addition, okay? Those are all capital improvements. You send a plumber to fix a leaky sink, that is not a capital improvement, that's just simple maintenance on the property, okay? You haven't added value by fixing a leaky sink per se, okay? So things that do add value to your condo, make sure that you get facturas for those. Furniture does not add value to your condo, okay? Remember, if you've taken the Buying a Mexico webinar, you know that furniture and contents are actually sold separately. They're not taxed at all. All right? So let's say you are doing capital improvements to your property. We talked about this in the webinar, but again, we thought it would be helpful to put it in writing and make it really clear. These facturas need to meet certain requirements so that you can use them as a deduction. First thing is the factura should be in the name of a owner. All right. Again, going back to an example where maybe it's myself and another person, one of our names needs to be on it. Both of our names don't, but one of our names do. And owner, all right, needs to be on it. And it needs to be their full name as it appears in their passport, so your full legal name. The other thing it should have is the owner's RFC, which is their tax ID number. We talked about this in the webinar. If you are a temporary or permanent resident or you're a Mexican citizen, you have an RFC. You need to apply for that online, but get it and put that in your facturas. This is really important. If you are not yet a resident, number one, after this webinar, I think you understand how important it is to get permanent residency, and everybody's eligible after 4 years. So get on it and do it. But if for some reason you haven't yet, this is the tax ID number you want to use. This is the generic tax ID number for foreigners. So get your factura anyway and put your generic number on it. Hopefully, by the time you sell, you will have gotten your permanent residency, and you will be able to still use this as a valid factura at that point in time, because at the time of closing, you do have your RFC and your permanent residency. Okay, so put your generic number on there in the meantime and go get your visa. Last thing that you need to pay attention to in your factura is the description section. Okay, so these are up at the top in the description section. It needs to firstly very clearly describe what the cost is. Don't let your contractor put miscellaneous or general costs. All right, that could be for anything. What you want is something that says aluminum windows, labor for construction, construction materials, block, whatever it is, right? But be specific. Don't let them put on a miscellaneous or a general cost or some sort of really vague expense. Make it very clear from the description. It doesn't have to be long, but make it very clear in the description that it's construction related. And the other thing it needs to say is it needs to very clearly say that it is a, let's say it's construction labor expense. Construction labor expense for the property located at and include your property address as it's written on the top of your property taxes, your legal address. Do that, because if I go to the notary with an expense for aluminum windows and it doesn't say which address the house is for, doesn't matter. My address may be at the top of it in the information section, but for instance, my legal address for my tax ID is my house, but I own other properties. So just because my address is at the top doesn't mean that down in the description, I'm actually paying for aluminum windows at that address. So make sure that in the description, they include the property address. That way there is no doubt when you're sitting in front of a notary that those were expenses incurred for that address specifically. And it wasn't bought for some other property that you own. Okay? Hopefully that helps you in order to get to fill out your facturas and get the full credit for those deductions. As we just saw, it makes a big difference. We are always happy to help. If you have any questions about real estate or vacation rentals, you're welcome to look up our website, mayanriveraproperties.com. We always announce all of our new webinars in our series on our blog, which is portamorelosblog.com. You can subscribe to that blog if you want to receive updates when new webinars are announced. So that's always a great thing to do if you kind of want to keep tabs on these webinars. Thank you so much for joining us. The one thing we ask is if you thought this was helpful, we ask you to share it. And thank you also for putting up with me and my voice this week. Please share it. Share the video recording on social media, maybe on, if you're in some Facebook expat groups with your friends and family. That's the one thing we ask, is that you share these webinars if you find them helpful. And finally, here's some contact information. So if you have any questions, you are very, very welcome to contact us. Thank you so much for joining us for this webinar, and we hope you have a great one, and we hope this has really helped you understand the capital gain tax. Thanks so much.